Hey everyone, welcome in to another daily editorial here on the KE Report. Corey and Chad here chatting with Dave Erfle, founder and editor of the Junior Miner Junky. Now, Dave, as we entered 2024, especially in this first week, and I realize we're only a few days through the trading week, looking at the especially precious metals sector, I think we all thought that there was going to be a lot of news released by companies, drill results, 2024 outlines, just generally more news because of the fact that many of the stocks and the gold price ended the year quite strongly. However, it seems weirdly quiet on the news front. Maybe we're going to get a ton of news next week and the next couple weeks leading up to the conferences. We probably have to expect that. But as we entered this year and on that news front, Dave, what are you expecting? What are you going to be looking out for when eventually we get all this news that has been waiting?
Yeah, that's a great question. I thought for sure we'd see more news too. And I finally took a vacation this week, and I thought I was going to have to get home and catch up on a lot of work, but not a lot of news is coming out. It's kind of eerie. But yeah, you're right. I mean, once the conference week starts in Vancouver, you got Roundup, and then you've got the resource conference there at Cambridge House, and also the MIF conference. I think that's when the news releases will really start to come out. Maybe, they're sitting on some also, waiting to release them right before those conferences.
Well, Dave, another thing that we can say when we look at the end of 2023 and moving into 2024 was gold didn't fall out of bed. As we know, it had a nice high monthly close and weekly close in November. It pretty much held its own in December, more or less flat coming into January. And you have made the case on our show so many times that we need generalists and just your average Joe investor to start thinking of gold having a 2000 floor instead of a ceiling. What's your technical assessment of how the yellow metal's been holding up? Because that's so important to get the rest of the sector engines going.
Yeah, I mean, it's really incredible what's going on here, Shad. As we headed into the end of the year, we had the market close on a Friday, right? At the end of the year. And it was also the end of the month, end of the quarter, end of the year. So we had all-time monthly high, all-time quarterly high, all-time yearly high. And we had the Dow, the NASDAQ, and the S&P closing near their all-time highs with retail equity sentiment at bullish extremes. I mean, if you look at the retail money confidence indicator, it jumped to the third highest reading in 25 years. And yet you take a look at the gold price, it also closed near all-time highs. Yet gold stocks are at bearish extremes, and they've never been this cheap in relation to the price of gold. So it's really interesting how it came into 2024. And then, this week we saw some profit taking, because we saw, a lot of resource speculators come in and take advantage of tax loss selling. And, the traders are already taking some profit off the table on a lot of these stocks. But if you take a look at the gold price, I think the Federal Reserve did a lot to start to create a $2,000 floor as opposed to this $2,000 ceiling that was there for 13 years. I think that's what the theme is going to be for the beginning of 2024 here is the gold price attempted to create that floor. We haven't seen evidence in the stocks of that being created yet, but let's see what happens here through the first few weeks here. We got the non-farm payrolls report coming out tomorrow that everybody's waiting for, and we've already had a little correction here in the gold price. It's come down to the 2040, 2050 range in gold futures, and there's the next support zones around 2010, 2020. And then the support zone below that is like 1980, 2000. So I think the gold price is going to bottom probably around that area. I don't see it going any lower than 1980 unless, we see some economic data start turning around and being very bullish for the economy. But the Fed wouldn't have come out with that dot plot of all those rate cuts in the future coming out if they saw that coming.
So, Dave, when it comes to, again, that money filtering into the stocks, to your point, we saw a little profit taking early this year, but it kind of went hand in hand with what we saw in the markets, too. Everything seems to still be trading together. if we do have this $2,000 floor? And if costs have maybe stabilized, do you think better earnings from the major companies, could that be a catalyst to bring in some more potentially longer term money?
Yeah, I think it is because that's what it's all about, right? It's all about the costs. I mean, that's why the miners continue to sink, especially the juniors continued to sink as the gold price, pretty much hung around $2,000. Each time it failed at 2,000, it just brought in more selling because the cost kept going up. But it seems to me, all the CEOs I talk to, and all the economic indicators I'm seeing as far as inflation is concerned, costs have pretty much leveled out, while the gold price is trying to make that $2,000 level of a floor. So, I think that's another theme for 2024 is going to be, all these majors and all these mid tiers. Once the gold price, once they see the gold price starting to create that solid $2,000 floor, I think the M&A is really going to start to pick up, and some takeovers and more strategic finances into these juniors.
Well, Dave, just along that line of thinking, if we start seeing better earnings for Q4 and in Q1 of this year for the producing companies, if the story is more about margin expansion instead of margin contraction in the M&A space, do you think it'll start with companies that have taken strategic stakes, let's say a 9.9% or a 19.9% stake, and go on the whole way and taken them over? Or do you think it'll be some wild card moves because of jurisdiction, where they want to either diversify into that jurisdiction or because they're right next door? Where do you think the M&A is going to be coming from the big boys?
I think it'll start off with what you said in the beginning there. This is why these companies do this, is why they take these strategic investments in these companies, these 19.9 investments and these 9.9 investments. But if you're a holder of one of these stocks that has this, what you really want to see is more than one company having a strategic investment, because then you might get a bidding war for that company once an offer is made. So yeah, I think it'll start off that way, but you're going to see some crazy acquisitions as well, and I wouldn't be surprised if you see some more major mergers as well. I know there's a few companies out there that are ripe for being taken over by a major. We've got Barrick coming out and looking like they're interested in First Quantum now that it's on sale. So I think you're gonna see more of that as well.
So it really seems like, unfortunately, the M&A, while some has been good for investors, broadly it hasn't captured the broader market's attention, except for some of those majors combining, but that didn't exactly bring in a whole flood of capital. One thing for the sector that can draw in a lot of attention and can truly make investors money are new tier one discoveries. However, those are harder to make as companies are generally have lower cash balances and are a little bit more restrictive with their cash. What are you watching on the exploration front here, Dave, in terms of something new, something that could be more exciting?
Yeah, I'd love to see that, but I wouldn't be participating in it because I'm not in early stage explorers anymore. I've been avoiding those for the past year or so because they haven't been rewarded by the market. There's been a couple. There's been the Hercules, there's been the Snowline, there's been the Newfound Gold, but those are very few and far between. You got to invest in a lot of frogs, and a lot of those frogs have gone down quite a lot to get just one or two princes that can really move the needle. That's too much risk for me at this point in this stage of the market, because there's just so much out there that's on sale that these companies have already found that they're de-risking in good jurisdictions. So, but I would like to see it, of course, because that's gonna draw in some general interest. I mean, that's what we need to see. We need to see some major discoveries. So I would definitely be rooting for that to happen. I mean, we've had one of those companies I just mentioned, Hercules, come out with some bad drill results this week, and the stock dumped 30%. So, that's another sign that, when you have these big gains in these companies, you got to start taking some off the table. So, I mean, I definitely like to see that, but I think more M&A would bring in more interest to the sector as well, especially a big boy M&A and mergers of equals to make these companies bigger.
Well, Dave, one stage of the mining stocks we haven't discussed yet is the development stage companies. They've been mostly dead in the water for the last year or so, as it's been too expensive to build these projects. We've seen the inflation hurt some of the narratives there, but now inflation has moderated some, and eventually some of these projects do need to get built. But there's one other angle for investors, and you've been in the sector a long time and have seen this many cycles, where there's the optionality factor of ounces in the ground that finally start getting traction. The way the ounces in the ground are getting valued now is almost comical how low it is compared to where it's been in other cycles. Do you think that some of these just on sheer beta optionality, when the sector starts really taking off, if we get a breakout in the metals, could we see that as an angle for investors to play?
Oh, absolutely. And that's what you saw back in December when we had that first pop. What were the companies that popped the most, right? You had optionality plays with, multi-millions of ounces in the ground that weren't even close to, being in the finance stage, move 20, 30, 40%. And even a couple of them that were at or close to the finance stage move up quite a bit. But yeah, that's definitely, a way to play it. And I have several of those in my portfolio. At the end of the year, my subscribers and I were fortunate to have one of our companies taken over, a Cino, for a nice profit at the end of the year, and we were able to sell it and rotate the profits and the investment capital into a couple other juniors that were on sale because of tax loss selling at the end of the year. So, you know, in a bull market, I would have been upset at the Asino sale because it wasn't at least a 3 times gain. But in a bear market, I'll definitely take it because, this is the time that we're accumulating these stocks to get those bigger gains in the future. And it gave us an opportunity to add a couple more of those stocks to our portfolio and also average down on several others to get a bigger position. Because a lot of these companies that I've been accumulating, I was happy to accumulate them at what I thought at the time was a very, very low risk entry point. And, some of them have gone down even lower, and I've been happy to add and average down and get bigger positions because I'm still dumbfounded at how cheap these things are. So, as long as you're not trading on margin and you have a lot of patience, you still got a great opportunity to accumulate a basket of these high quality juniors that are trading at low risk accumulation entry points as the gold price attempts to build a floor at $2,000 here in 2024.
Dave, I know you focus a lot on the juniors and development stage, especially now, but even some explorers. Are you at all interested in small scale producers? So, still can be considered junior companies, but these small scale producers do make money. They are reinvesting back in the project. Do any of them attract you?
Well, yes, the Junior Miner Junky portfolio, the base of the portfolio is lower risk, growth oriented producers. I have a handful of those. And as far as scale is concerned, they have to be mining projects that have blue sky potential that can get bigger. They're in district scale size land packages. So, in other words, not dinky little mines that only have, 1 or 2 million ounces with not much upside left. You have to put your CEO hat on when you start accumulating these things. Do they have blue sky potential? Sure, they built a mine there and it's small now, but does it have the potential to get bigger? Are they exploring also? Because that's the great thing about a lot of these growth oriented producers. You get the upside also of them being an exploration company because they're still exploring on the property where they're producing.
All right, Dave, we'll wrap it up here. And I'm sure in the next couple of weeks, there will be a lot more news for us to talk about. So, in the meantime, enjoy this week and we'll chat with you in another couple of weeks. So, hey, Dave, thank you very much for your time today.
All right, guys, thanks for having me. I'll look forward to talking to you again.